95% of traders lose money, and it's got nothing to do with psychology, risk management, discipline, trade execution. It's effectively this: you're trading inside of a candle range that you can't even see. So what does that mean? It means that every trade you take is literally a coin flip until you understand how to read higher time frame price. Once you do, you'll get into high probability trades like this 2.5 hour trade that played out perfectly on GBPAUD. So let me show you exactly what I'm looking at. So this is the 12-hour time frame. We're going to use this as our swing trading execution time frame. Price is fractal, so this works just as well on the lower time frames. But for this, we're going to look at 12-hour price execution in line with higher time frame candle behavior, because this in isolation gives us absolutely nothing. So the first thing I want to do is overlay a higher time frame candle. I'm going to overlay the weekly candle. So what we see here is that price is in an uptrend. It then liquidates the previous weekly candle range. This area here represents the entire weekly candle. Price raids above, closes inside, and then dumps to the low. This is classic AMD: accumulation, manipulation, distribution. Then what happens? Price breaks out below the low of this previous weekly candle. But crucially, what it does next is close inside. So you see this weekly candle broke out below the previous candle range. What did it also do? It swept all of the liquidity sitting at the external range lows of these candles. It then crucially closed inside. This means that this weekly candle is an accumulation candle. The subsequent weekly candle is a manipulation candle. It manipulated its previous candle. So then what are we looking for? We're looking for distribution, AMD, to where? The higher time frame target, which is this high in the market. Because this is how price moves. On the higher time frames, in fact every time frame, price accumulates, manipulates, and distributes. So we can then pair higher time frame candles with lower time frame price action to get into high probability trades. So what happens next? So price closes right here at this point. A new weekly candle opens. It then drops, fills internal range liquidity, and then we see a shift higher. So if price wanted to go lower, this bearish price action would be respected. But we've already seen that this is a manipulation candle. So we're front running. We're expecting price to give us a bullish reason to get into a trade. We get that as soon as we see this bullish price action. Then what do we get? We get the formation of, first and foremost, an order block, the last sell to buy. We also get the formation of a bullish fair value gap. Fair value gaps sit between candle 1 and candle 3. So that is how we execute this trade. We get involved at the fair value gap. We cover the low of the order block, less. If you want to, you can cover the swing low or the low of the order block, which then accounts for the manipulation at that low. And where do you target? You target the high of the accumulation candle. And that is a clean 2.5R. Accumulation, manipulation, and distribution to the high. Without this context, these higher time frame candle ranges, you would be trading blind. You could use some sort of rule-based system like break of structure or market structure to get involved in trades, but that's not how price works. Price accumulates, manipulates, distributes, and that's what you need to trade every single time. Let's look at the same example on Bitcoin USD, because this works across Forex, metals, crypto, any financial market. So price, again, we're looking at the 12-hour time frame. We can see highs, lows being respected, disrespected, but it's very hard to trade this in isolation. Again, let me just bring up the weekly candle. So we see price accumulating. It then breaks out aggressively to the highs. But crucially, the weekly candle closes at this point here. So this is a bearish candle that swept the previous weekly candle. It raided the external range liquidity at this high and then closed inside. So this becomes a manipulation candle. Accumulation, manipulation. So where are we now looking for distribution? To the low of the candle. This is our short-term target for price. Price is going to drop aggressively and distribute to the external range liquidity at this candle's low. So where again is our 12-hour structure? So as this candle closes, we can see that we're already in the point of internal range liquidity on the 12-hour time frame. So this is the order block right here. Price is about to close, so we can simply take an entry from the order block covering the swing point, and we want to catch that distribution to the AMD low. That's a 4-hour trade. Alternatively, you see that there's a bearish fair value gap in the leg. So you can also take the entry from the fair value gap and you still get a 3.61 hour trade. So this is how to properly read price. You need to combine execution with higher time frame candle behavior to spot accumulation, manipulation, distribution. But it's not always as easy as using the weekly time frame, because this happens on every single time frame: the weekly, the 2-weekly, the monthly. So true understanding of price is being able to align those time frames. Once you do, you can read the market 30 plus pairs in less than 15 minutes a day and get into high probability swing trades like this time and time again. And the good news is I teach this in detail on my YouTube channel. I've got 30 videos over a 3-part series that go deep on trading candle ranges. So go and check it out. See you on the next one.